So just about everyone here has been introduced in some matter, and FolkInvest will be discussed later on in the Petrakutcha. But Sigrun from Fyong, please introduce a bit of your company. And your company has used crowdfunding, so why?
Yeah, we used crowdfunding because we are a clothing platform for rental of clothes. So, yeah, as you said, the name of the company is Fyong. Have anyone heard about the company? Yeah, that's so nice to see. But then you might know that we have lenders that are private persons who rent out on the platform. And when we were looking for capital to just kind of, like, use a renting and lending platform that we built ourselves. And to increase the sophistication of the platform, we had to raise much more money than we were earning, you can say. And in order to involve our customer to a higher extent, we thought that crowdfunding was the best way, because then you get your users and customer on the owner side. The second reason why we did it is that the traditional investor community in Norway are mostly men over 50 years, and they are not in our customer group or in our target group at all, because we are a company for women for now. We might change that, but it's a problem that women feel more than men. So that was also a reason why it was more difficult to kind of actually just engage the typical manly investor of 54 our business idea. While for women, it was something people just got, we felt, and many wanted to invest. So for us, it was the best way, we thought, to raise money. And we also did it with big success and got 8 million kroners raised. And 83% of them were women. And in Norway, 1% of startup investors are women, according to Investor Norge. So that was a big jump.
Great, thank you. So, Geir Atle, you're also a CEO of Funding Partner, and what makes you excited about crowdfunding and investing in crowdfunding when you hear Sigrid's story here?
Yeah, so I get excited about it because I think there are a couple of things you have to look at each silo of what type of funding. If it's equity, like with Sigrun, you're basically getting access to invest in early stage startups which you wouldn't have been allowed or able to invest in. Like you can go to Oslo Børs or Merkerbørsen, but there are no early stage startups like that. So you basically have a unique chance to differentiate your portfolio and invest in early stage startups. And on the lending side, you get to lend. So normally if you go into a bond, you have to have at least 500,000 or 1 million, unless you do it through funds. And also with lending, you get, I think it's 1,000 kroners for most of the platforms as the minimum ticket. So basically you're getting access to a new type of investment opportunities.
Yeah. And Øyvind, FolkInvest, you are not introduced so far either. What are your contributions here? Is it a platform as well, like Sigrid?
Yeah, we have a slightly different model. We have made this tool helping companies searching for raising money in equity themselves. So we have made this tool helping them raise the money themselves. So it's a slightly different model from the crowdfunding platforms. And I think what we hear here is that there are a lot of different aspects. All these companies try to fill this empty hole. Okay. All these companies, all these crowdfunding platforms. Hello? Oh, that's better, that's better. No, the reason I think behind all these crowdfunding platforms is that we have this hole, this hole in the capital market. In Norway, this is particularly big due to our delay on providing this risk capital. And what we see from all these different actors, and Fyong, Wavefall and others, is that we see the willingness to take this risk capital from each individual in the society and put them into good investments for future employment. So yeah, I think our perspective in this as FolkInvest is to try to to fill this market hole and help all these entrepreneurs searching for the competency of raising the funds themselves, and on the other hand, helping all the people being able to invest in risk projects to make an involvement in the future. So that's the two aspects in our behalf.
Yeah. Oh, you just keep it. I guess you're
Okay,
going to talk a bit
thank you.
more. But Kristin Eriksen, what are your thoughts about this? Your company is more of the traditional part, right? And so do you think of this like a more complementary, or is it a threat to traditional investment models?
No, it's definitely complementary. I think it's so important that we have different tools to the different stages, because the companies have very different needs. But I think the most important difference is the active ownership. And the thing with early stage companies, I still haven't met an early stage company that is not in need of more resources. And that's the kind of difficult part with crowdfunding, because normally it's more of a passive investment. But obviously the companies can get the resources elsewhere from people around the company. But I think the strength from companies like mine is that we do this every day. We have this amazing network of people around us that can really lift and help the company. And when it comes to value creation, I think it's very important in the exit phase that you have someone with the right relationships, because at least in Norway and also in the Nordics, it's a really small world. So knowing the right people still really matters when it comes to this.
Yeah. So, but Bruno, what are the disadvantages of the traditional models, and when should we use crowdfunding versus the traditional way of investing?
Yeah.
Yeah.
So I mean, when to use crowdfunding against, or what are the disadvantages? I mean, one of the things, or Jamie already so beautifully explained, you know, it's the phase of the company when they need the funding and the valuation, obviously. And what I've noticed here in Norway is there are many high net worth individuals or angel investors that are looking into investing into tech, and our friends at Angel Challenge are doing an incredible job in teaching these investors how to invest, but they're still very risk averse. So they don't place very big tickets in these companies. Why? I mean, again, not knowing what the exit may be. So in our case, for example, the liquidity becomes a very big way of dissolving that risk slightly. So one way you can teach these investors how to invest into early stage company, not to invest into tech companies. But also it's not about going against the VC model. Like Jamie explained, VCs are necessary, especially in the later funding rounds. But the crowdfunding enables those angel investors and retail investors, or the crowd investors, all of us here in this room, to potentially, like Geir said, have access to those deals that were previously limited to only very small group of investors. So with most of the crowdfunding platforms, the ability to use the power of the crowd on top of the traditional funding methods is a very powerful combo, especially in your case, where most likely in your next round, you can probably already attract some investors at higher level, some very high net worth angel investors, and potentially some of the VCs. Since you're a consumer-oriented product, now you have a user base that they love your product. They love the company that you've built. And turning these customers into your investors has a magical power of elevating. They all want best for your company. And now imagine when you can do this globally. So you're no longer, you build a company in Norway, but let's say you want to expand into Sweden or outside of the Nordics, and now have those users turn into investors in the markets that you're trying to reach. They want to help you because they now invested into your company. So combining the crowdfunding together with the traditional methods is more of a powerful combo, not one against each other.
Yeah, Seirin.
I just want to support what you said about the crowd being kind of cheerleaders for you, and also wanting to invest more. And after we had the crowdfunding, we now get every week, we get 1 or 2 new requests for investing, which gives us confidence that it will be much more easy for us to raise money when we want it later. And you also get this really engaged crowd of ambassadors and mentors, and we ask all kinds of questions to our investors, and they get us very early feedback on new business ideas, and so we feel that we're going to be on a better track just when we use our investors that way. Yeah. And also VC funds. Before we had the crowdfunding, it was really difficult to get a meeting with VC funds, but now we also experience that many VC funds contact us to be able to maybe invest in our next round. So, and I think that's because they know about the marketing effect and how the crowd kind of gets so much ownership for a company.
Absolutely. Even we had this experience where we had an investor from Japan, and without us knowing, he just started making shirts with Thunderbeam in Japan. And well, now we have a company-wide selection of shirts, but these people, they want to help. And you're right, I mean, they will do everything. And obviously for the VC side, you've proven that you not only have a product market fit, but you also prove that you have built something that people want to give you money for, something that they can see that could potentially be the next unicorn. And obviously, I mean, what is the worst fear for any investor is being left out on a good deal.
So Jamie,
I just wanted to come back on a point there, and it links into earlier when I was saying about how VC isn't for everyone and for certain excuse me, I'm the only English speaker here, and I'm making a mess of it. No, so I was saying VC isn't applicable for everyone, and especially for B2C businesses. I really like the equity crowdfunding. And even ourselves, I mentioned early on about how we just bought a golf course, and it's the worst golf course in Ireland, so I won't be inviting any of you to it just yet. But one of the things that we're going to go out and to fundraise for it, we're going to do an equity crowdfunding for the exact reasons that you guys were just talking about. We want those brand advocates. We want people being like, oh, I own a small share in this in this golf course, and it's not just a golf course, it's going to be a sort of outdoor activity and tourism sort of center, but the point is there that you have your brand advocates and you have proof that people are interested in it, and it gives them a sense of ownership. And not only that, they then go and tell their friends, or they tell their mother and father that, oh, by the way, I just bought a small share in a golf course, let's go there. And all of a sudden we've now got 4 new customers on top of investors as well. So that's where I think it really is great.
Yeah, this is an interesting topic, because when you're going to investors, you have to propose your full business plan and everything. But Kristen, how do you think that investors, or what do you think they think about combining these two models?
Once more.
What do you think about combining these models? How do investors think of the crowdfunding aspect? Do they think about going into the crowdfunding and joining the crowd, investing in small shares, or are they still just going through the same route? Okay, I want to share, I want this much I can invest. You said it was complementary, and so how is that balance for the investors?
As mentioned here, I think the beauty of reward-based crowdfunding is that you get like the ultimate market test of your product, and that's amazing for us investors, because then we get down the risk of the company somewhat, because we see that the company actually works in the market. And crowdfunding in general could do that, also the equity-based and the debt-based, just to see that the crowd really likes the company, and especially when it's consumer-focused. So as for us, that would be the market test that could initiate an interest from us, because normally many of the companies that come to us is a bit too early. The risk is a bit too high for us to understand if this is going to fly or not. So again, I think that the toolbox for investors or for companies should be even fuller, with different types of investment strategies. Yeah.
Yeah. So, but Geir Atle, one of your questions was, it is a new thing, right? And you start investing, and you can see even on Facebook, you're like, okay, come on, bring me some money, and I'll do this big idea. Why should I jump on it now? Why should I just give my money away? And like, as you're saying, the business angels or other more money-giving investors. They are like, okay, this is risky. I don't have everything I need. You have to do this. Why should I do it? Why don't I wait like 2-3 years and make everyone else throw away their crowdfunding money?
So yeah, I guess as it goes with all types of investing, it's about being early. And if everybody else is aware of the same investment opportunities as you, then it's really hard to kind of get an arbitrage. So if you just look to the UK, the first 2-3 years in the UK, there was a super profit of 2-3% interest on the lending cases. So basically, you were getting returns, which is above what they're now getting. So in the early phase, because so few people know about it, you're some cases, on average, getting a higher rate of return on lending, and you're potentially getting less competition on the equity cases, so you can actually do a really good deal. Or you can wait 3-4 years more, and then everybody knows about crowdfunding, and you might get normal market risk-based returns. So that would be my pitch for everybody jumping in now.
So, I mean, what is the difference with Folk Invest and other equity crowdfunding platforms? Why should it go to you?
First, I'll give a comment to one of the speakers here. I think in our platform, the history shows that most people invest 1,120 kroners. The average is 10,000 kroners, and I think that's the whole point about the questions about the investors. Because what is the investors? And I think we're touching that in Norway now, because everyone think about investors as those with the big wallets and the ability of investing big amounts. So what we do now is that we are introducing new tools, giving opportunities to the people of Norway investing smaller amounts, and that brings a much bigger group to the investors. And I think that's the fundamental thing about everything, that we use the insurance method of spreading the risk out on much more people.
Yeah.
So that's the beauty about it. So what was your question again?
What was the difference between Folk Invest and...
Yeah, I mentioned it earlier. Folk Invest as a company that doesn't recommend investments in specific cases. So we just made this tool, giving the capital searching companies the ability to to raise the money themselves. That takes us sort of out of the loop for what most other companies do. But I think it's kind of successful. Over this summer, we have had these 2 fantastic projects with Wayfall Up here on Friday afternoon, raising 4 million Norwegian kroners in 6 hours. Incredible work done by them, slightly helped with our platform, of course. And this summer, Luado company raising 3 million NOK during the summer holiday, 45 days from first call to close down everything. I think it's amazing. It shows both the reason why this is important to close the gap, to close the black hole in the capital market, but also the investment, the willingness of investment in Norway. And I think a lot of people like to involve themselves in the future employment, like the grønne skifte, the environmental aspects around how to change the businesses in Norway. I think that's something that will impact as well how to invest and let them be part of it. So yeah.
We touched upon market effect, bringing your customers to own, or reducing risk to get more investments. But Jamie, is there any other non-financial criteria startups should consider when kind of evaluating what kind of investment strategies to pick?
Yeah, I think we've sort of touched on it a little bit, and we've said how the equity just crowdfunding in general gives you the brand advocates, it gives you experience in a marketing campaign, it gives you good brand recognition. But I think what other things that startups have to be considering is after what I briefly mentioned, but like what else can this investment provide for me? So equity crowdfunding might be able to provide you with million NOK or 100,000 NOK or however much you need for the next round. But after that check's written, is that the last thing you hear from from those investors? That's one thing that I think as an early stage investor we have to be really good at, is explaining to the companies that we invest in the other things that we can do. So for example, we're going to help one of our companies through that IPO process in Stockholm. If they'd raised in a crowdfunding sense, they wouldn't have had that access to us and acting as advisors. Or we have a company who's about to go out for a fundraising, but they've never hired a finance person. So for 1 day a week for the next 6 months, I'm going to go in and sit in the desk as their head of finance as well, and just sort of get the bones of a finance department ready for them. And that's another thing that they would have had to go. There's a lot of intangible things and access and contacts that we were, touched on earlier, that we bring that a platform or a crowdfunding wouldn't bring.
Yeah, you just you're playing the question. His IPOs are so 2015.
I know, yeah.
The question is for you.
I was just saying that that's not entirely true, because if you in most cases, VCs can be part of an equity crowdfunding round, where, in our case, we often have VCs join the round, they fill the majority of the round, and now they lead that investment round. And leading the investment round, what it means is you represent the rights and the benefits of all the investors in the syndicate. You syndicate, you co-invest. And in these cases, it would be you still helping the company in the exact same way, but you would have additional help from other investors. The same way as in the pool of investors in the syndicate, you may have a perfect CFO that has already invested and now has its own interest into contributing into the success of that specific startup. So again, it's building on top of what's already there. So it's not necessarily that you cannot do these things with equity crowdfunding. You can, and same way you can with as a VC.
Yeah, no, and I think, I think that's very true. And when I was speaking, I sort of imagine it more as retail investors or a lot of smaller investors. And in my very limited experience, I will say, I've found that if retail investors will make the investment but then take a back seat, maybe that's something that platforms work with, keeping all of the investors active in their investment company. And it's just that I haven't come across it in my, as I said, very limited dealings with crowdfunding. But I think that's one thing that it's certainly what we try and say, is that we are active without being without getting in the way. That's how we like
that's
to be.
super relevant, because it's not unusual for investors to give a lot of promises, saying, well, pick me because you're the best company and I'm the best investor and I'm going to help you with this and that. The investment is being made and the investor sort of disappears. Why? Because they have many other things. They have usually run companies, or they have other investments. If your portfolio already has 20 investments, it's unreasonable to believe that they can help you. So for you as a VC to take that extra step, it's very beneficial for the companies, but also if you co-invest with others in the syndicate, you're right. Keeping all the investors engaged, because startups are really bad at reporting. So the platform almost forces them in order to do so, because you have to report to your investors. You have to keep them informed, especially in our case, because we also have to worry about the prices in the secondary market for the tokens, right? So you got to make sure that your investors receive news, and then in that way, keeping your investors more engaged.
Sigrid, you had...
Yeah, I totally agree with what you say. And we have now about over 200 investors. We have one VC fund. That was one of the first investors we had before the crowdfunding. And it all works really well together, because we use the VC fund and the more sophisticated investors in one way. They're maybe at the board. We use them for certain strategic questions. And then we use the crowd for very, very different questions. Now we're going to have a general assembly on Monday. We're going to do normal things you do in the General Assembly. The crowd's going to learn a lot about how to actually run a business with General Assembly and everything. They're not going to be the advisors. They are not the advisors, because we have other advisors, but it's still, I think the more sophisticated investors we have think that the crowdfunding just reduced a lot of the risk for them. So now they're more eager, and it works really harmonically if you just know how to use the different skill sets the different people have.
So I can't mind thinking that technology is working and driving this field. Blockchain, data, analyzing, collecting, right? Because usually you, as a startup, as a company, you provide all these material, but what you presented earlier from Funderbeam, it's like you can collect a lot of data, and you can use blockchain to confirm it and ensure that it's right. But Kristin, how do you think, from your perspective, that technology is driving this innovation, or is it other means driving it?
Yes, I think it's both technology, but I think the basis for it is just needs for new tools and need for solving things differently. And I think that we're starting to see a very good pool of options for companies now. I think it's super important that all the companies get a good guiding throughout this system, because it can have a huge impact to choose the wrong tool at the wrong stage. Normally you can get out of it, but still having the universities and all these startup facilitators that can help the companies, I think that's super important. And I also think that us as investors should be more open to these new solutions. For me, cryptocurrency is not what I'm dealing with at a daily basis. So for me, I'm super risk averse when it comes to that. But I think that it's important for us to also learn about these new tools coming up.
Yeah. So I was thinking about turning to the audience, but for, last, Gerard, I don't think you're prepared for this question, but there has to be some implications here too, because everything I can hear is like, oh, it's so cool, it's all right, you can get all this money, it's all these good marketing effects and everything, but what are the implications of running crowdfunding from traditional investment methods? Why is this so great? Because there has to be a downside as well.
So you want to know the downside?
Yeah.
Yeah, so for the people or the companies asking for money for crowdfunding, I guess several of the aspects has been touched upon. The second time you need money, if you need money once more, it's very hard to go back to the crowd and explain it, because they thought it would just take off. Then a traditional VC fund, they already, when they give you the first money, they put another chunk of money aside, and they know you're going to come and ask for it again. So that's one example. Another example is I mean, you have to deal with a lot of investors. There are a lot of new tools. Sigrun can easily tell you about which tools they are using. That will help you on those sides. But still, you have 200 people who feel they own your company, but that also means they will come knocking on your door, maybe asking and bugging you on other things. So there are definitely pros and cons to both aspects. But I think if you understand the case when you need and can use which type of funding, I think it's just a supplement. And if you use it right, fully, I think it's a great tool.
So, Øyvind, do you have any comments on that one?
I think most is touched upon here. I would like to have a comment on the technological part of it. And for me, working with equity, I can't see the big change what the crowdfunding gives to it. You know, the only thing that's different is internet and social media. The rest is exactly the same as before. So it just gives an opportunity of reaching out to a bigger network. And that's what needs to be controlled and handled. And it shouldn't be so much work against the opportunities the internet and social media gives to this business. That's my final comment.
Right. Turning to the audience, I guess someone is probably investors or thinking about investing. Is there any comments to this? Any aspects of, yeah?
Some companies in the initial phase come with a very strong pitch. It sounds very cool. People start invest, And when I search in eBay, the product is already there, much cheaper than perhaps what they are going to end up with to market for. What about evaluation? What about confirming that this is not the same copy as what is already in the market? Because people, I don't expect everyone who wants to invest even 1,000 kron looking to market and figure out if there is a copy exists already.
Can you send the microphone? Yeah.
Yeah, we have built in this discussion group around investments, allowing the wisdom of the crowd to work. So we think it's important that everyone can contribute validating the idea. So all our potential investors can ask the questions. The company have to answer the question. Yeah, that might be positive or negative. So in our opinion, it's important to make sure the idea is not worth investing in also is shut down. So our system is built exactly to fulfill the need of the wisdom of the crowd. So we think it's important that it's better than to have 1,000 persons evaluate the case than to have this panel of 5 persons, mainly men, looking into the case. So that's our way of looking at that, into that.
There's another question. Do you mind passing the microphone?
Yeah, interesting panel. So what I think is the major bottleneck and issue here is the ability to have liquidity. So for instance, at Folk Invest, where you can do equity crowdfunding, you can within minutes buy shares for however much money you want. But if you want to sell those shares right now, it's a big problem. So in the US, you had something called the second market. So if you were a shareholder of Facebook as an employee, you were able to have an exit of some sort. Do you see any solution to that challenge? Because it's a problem both for people investing, but also for the startups, because then it's a less attractive investment opportunity.
Yes. So that's exactly what we are achieving or trying to achieve or doing, where every investment round that we help to raise on the platform immediately becomes tradable on the secondary market. So what it means is if we raise a round of 1 million euros, for example, the moment the company receives the money, all the investors can actively start trading the shares that they already bought. And usually we set the initial token price, so token that represents your ownership in the underlying asset, which could be equity or convertible, like Nick explained. We usually set that around €1, so you know where the starting point is. And then when you start trading, depending on how much can you get at that given moment, like can you sell that token for more or less. So it does exist, even here in Norway with Thunderbeam. So today you can log in, you all can sign up as an investor, and you can actively start buying tokens that represent those shares in the companies that we've raised money for. And the more companies that will be raising on the platform, hopefully soon from Trondheim as well. Once you invest, you can, for example, within after a year, the company is doing super well, and you sell half of your initial investment to make back the money you invested. You keep the other half and then keep reinvesting the money you already made.
Yeah, so as far as I know, now we're into legal territory, and I don't think it's legal if you do it pure stocks. If you do tokens, it's a way of getting around it. But if you want to do second-hand market with stocks through Folk Invest afterwards, same as lending, if you want to do a second-hand market for lending, it doesn't exist. So there are, I guess, the Norwegian Crowdfunding Association, we have a list of things we want to fix. And I was actually at the Parliament on Friday. And the good news is that all the the parties from far left with Rødt to the Democrats on the right, all of them love crowdfunding. So I think it's just a question about time before we can work on them and kind of mature all the laws that we need to change, because the laws are basically what's hindering us. I think I speak on behalf of all the platforms that we would love a second-hand market directly with stocks and debt, but it's not legal today.
Any other questions? Comments? Yeah.
It's fair to say that if you like to invest, you shouldn't, as of today, invest the money you need tomorrow. You know, I think it's fair to say that. You don't agree with me? Yeah. I said, if you like to invest through crowdfunding, I think it's a fair risk question when it comes to sell out the shares you buy. You know, as of today, it's you tie up the cash for some years. Fair to say that. You agree with me?
Here in the Nordics, I mean, in the US, it's called venture capital. Here in the Nordics, we call it riskkapital. I mean, it's your capital at risk, which means that as an investor, no matter at what level, whether you're a retail investor or an angel investor, professional one, or a VC, it's a risky business. So the moment that you make that investment decision, no matter how lucrative that may be, you have to be aware that this could be a potential next unicorn, or you could lose all your money. That's what investing is all about. So, you know, as long as every investor understands the risks that come with early stage investing, you're obviously free to make the choice in where you invest your money. But you're correct. I mean, riskkapital has a risk written in it for a reason, right?
But then it's a follow-up question, because everyone downloading an application on their mobile phone, they kind of always agree on the risk in this issue, but they never really understand the risk before you're in it. And you say, okay, now I can get my money back. Wow, they didn't read that small line. Do you think people, and I mean everyone here and everyone on the street actually knows when you're putting in 1,000 and you're like, oh, this is a really great company, it's going to blow up, I'm going to make tens of thousands. Do you think they are aware of that risk? Is it enough information to the crowd?
Most definitely, not everybody, right? But I mean, so we are regulated, and so are other few more platforms here. And we are required, every single time we will even do any sort of marketing towards the investors, we're required to, and even if that's a Twitter post or Facebook, to say, you know, investing is risky business, capital at risk. So yes, you may not understand, but I mean, we're required to provide that information in not only in a small print, but everywhere where we talk about investing. So, I mean, yes, they may not be aware of it, but our job, all of our job, is to make sure that it is a risky business, as it is lucrative.
Yeah, but it's the same. It's a personal data issue now, and in terms of regulations in Norway, we are changing it, and Europe is so. But so, do we know it? Are we aware that we're crossing off, yeah, it's a risky business, okay, once you're actually binded by not getting your money back? So let's hold on that one. Yeah, a comment there.
Speaking of risk, as you said now there's 17 platforms in Norway. What's the risk associated with the platform itself? Who's going to survive in 5 years when you want that exit?
Yeah, good question. And I guess just looking to some other countries first, UK 10 years before us. Of course, you have a lot of platforms coming, and some will survive, some will not. There will be consolidation, etc., most likely here as well. And then what has happened in UK and other markets is that the regulators put in place requirements. So, for example, in Norway, to get a license, konsesjon, you need to have certain kapitalkrav. So at least amount of capital. And if you go below that hurdle, you lose your license before your company is dying. So in that sense, there are some type of mechanism already in place if you use a licensed platform. But then you can also use unlicensed platform and so on. But yeah, there is a risk, and I think every platform is pretty good about explaining the risk involved in each platform, how each has set up to kind of mitigate it. But yeah, there is definitely some risk involved, and the regulations today, from a crowdfunding point of view, since we don't have a crowdfunding law, we only have a lot of other old laws that we're tweaking to be allowed to do crowdfunding. There's not a specific thought in place to make sure that each platform's surviving, but there's definitely things in motion right now to take care of that, because they see it as a big issue if suddenly the platform disappears, but you still have the shares and you still have the company. So in that sense, you still own the shares. So you just need to somehow use other tools to make sure that you get your money back and so on.
All right, even though we got a bit on the downside here, it's been amazing to hear both Young and you other guys seeing how great effects we can get for crowdfunding. All of you guys are going to be here still. When we come back, we're going to have 10 minutes break until 3:45. Then we're running really speed of FintechAcademy, having pitching just about from several companies. So please stay, all of you that can stay. Bring your coffee, get ready for really speed talks coming back at 3:45.